What is going on, YouTube family? Hope you've all been having an amazing day and a great trading week thus far. And in today's video, I want to teach you guys how you can take high probability trades off of key levels. Okay? Because when I first started out in trading, the way I used to trade key levels was simply, for example, support and resistance, something like this, sell by there, buy by here, but I'd always get stopped out. All these wicks would take me out, and I just had no idea how to trade them. Or if I would be in a place like, I don't know, basically anywhere. Okay, I could be taking buys by here and just getting completely demolished. Okay, so I'm going to show you something very simple that you can employ in your trading strategy, or this is something that you can test. And if it works for you, then fantastic. But as always, guys, please do your own testing on everything that I'm telling you. Don't just take my word blindly. And if you find that the results are good and it's consistent with your approach, then fantastic. I'm glad I could have helped in some way. Okay, so all you're going to basically, I'm going to run through some examples. Okay, I do trade the Aussie dollar USD, so this is a pair that I'm very, very familiar with. And I want to show you some trades that I've taken that I can just recognize from the past, but also maybe some setups that I hadn't taken for whatever reason I wasn't trading. So I'm going to be making sure that I'm not being biased on this, because it's not that every single time it's going to win. That's just a false idea that, if anyone preaches to you that this setup works 100% of the time, then they're basically just lying. Okay, so the first thing that you're going to basically do is identify a key level. Okay, so how do we identify a key level? Well, we identify our key levels, as you remember in previous videos, by swing highs and lows or areas that have multiple wick projections. Okay, so I'm just marking out a few as I go along. Okay, and if you, for example, if you look at this level, if you want to extend it by here, that's absolutely fine. If you wanted to do something like this, again, it's absolutely fine. I'm going to basically run through you how you can accurately take these trades. So the little tiny details don't really matter. We can see an area here with multiple wick projections. We can see a swing high by here. We can see a swing low by there. So that's the first step. Okay, let's put it back. Let's put it by here. Okay, identify a key level. Okay, so what sort of things aren't key levels? Okay, well, okay, this is not a key level, right? Like if you wanted to just do, I don't know, this by here. Okay, that's obviously not a key level. This is not a key level. Okay, if you just have like single candles, they're not key levels. It has to be a swing high or low, or multiple wick rejections to minimum. Okay, so that's the first thing that you're going to identify. Okay, so let's go to, I don't know, let's go by here, for example. Okay, let's say that you are trading this in the morning. Okay, oops a daisy. Right, okay, so when you're drawing out your key levels, make sure that you're going from, if it's a swing high, okay, this also applies to an area with multiple wick rejections, but if you're going off your swing highs and lows, again, make sure you're going from the body of the candle, okay, to the wick. This is what I found to be the most accurate. Okay, you could also do something like this, but for me, I know some traders like to do this, but I, for one, just feel like you get caught out more often than not. And I'm a trader who I want to get the best entry possible, so I don't really mind if for example, price wanted to push down by here, I'm not bothered if I miss the move. Okay, because if I'm planning to take the best trades possible, then I'm going to take the best trades possible. So for me, that's just a logic that just works out for me. So I don't mind missing trades. I know some traders might do something like this, which they may want to get like the best entry possible. For me, more often than not, price won't always react that high, or it won't always react this low. So I've just found the nice middle ground to work with. Just keep it consistent, be as accurate as you can, go to the tip of the wick, to the rim of the body, right by there. Okay, so once you've identified your key level, the next thing that you're going to basically be doing is waiting for the 1 hour. Okay, this is all in the 1 hour time frame, I should have specified. Waiting for the 1 hour to sufficiently reject it. Okay, so what do I mean by this? I mean, if price came in and strong closed inside by here and it had like absolutely no wick, right? And it was a really strong momentum candle, then that's not a sufficient rejection. It's not the reaction we're looking for. Because when we're trading off key levels, we're essentially expecting price is going to bounce from that level. So why would you want to take a trade when price is really strong pushed into this level? Granted, if like the next candle closed like strong bearish here, then that is something we could do as well. So it doesn't always have to be a wick rejection. Okay, go right here. Wick rejection or a candle close in your direction. Okay, this is where there is a little bit of a gray area, but typically a rule of thumb could be wait for the wick rejection, or you just see a candle close in your direction. And what I mean by candle close in your direction basically means that if we're looking to take trades from a resistance level, then we're looking to see a bearish candle. If we're looking to take trades from a support level, we're looking for a bullish candle. Okay, so you don't have to be super specific with it. Simply just think to yourself, if I'm taking sells from a resistance, if I want to take sells from a resistance, I'm looking for any bearish candle. So as long as it's red, I'm happy. And as long as it's green down by here, I'm happy. So let's carry on. So we can see that we've got the rejection by here. Boom. Okay. So the next thing that you're going to do is scale to the 5 minute. Okay. Now when you go to the 5 minute time frame, you should be able to see now obviously some kind of structure, and what we're basically looking for is for the trend to shift in our direction. We can see it's currently oh, hang on a minute. Okay, cool. We'll talk about this in a little bit. Okay, I should have actually probably put by here. Okay, before we scale to the 5 minute, mark your exit target. Okay, so your exit target is always going to be, right, when you use the brick wall theory, if we've spoken in previous videos. So for those of you that don't know, the brick wall theory is simply when you see like a push like this, where there's pretty much like no opposition, there's no wicks, there's no like any messy price action, you'll grow to understand that this is a brick wall. Okay, so you're just going to basically be scanning to the left, keep on going, and until you find your first level to the left by here, then that is going to be your exit target or your key level that you need to watch out for. Okay, because some people might draw this as a key level. Okay, for example, this could be like some kind of maybe break and retest. I would never look at it in this way because I only take the break and retest patterns. For those of you that don't know, the break and retest is this pattern, right? Boom, 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 boom. Okay, and this for me only works best in trending markets, and this is not a trending market. It has to look like this. Okay, and remember the inverse is true for downtrends. It works the exact same way. All right, price will break this low. You're looking for the price to come back and retest this level and push down. All right, so when you use the brick wall theory correctly, you eliminate all of these inaccurate levels that you would probably be wary of or you're looking to take trades from, and price just doesn't really do anything. Like, do you know what I mean? It just, there's no issues. So when you use the brick wall theory like so, you identify this key level. So this is your exit target. Now, it doesn't mean that you have to take your exit right by here. It just means that this is now an area in which you can take your exits however you please in and around this area, okay? Because you might not get the entry by here, okay? You might not get the entry by there, okay? You might take your sells by here, which in my opinion is perfectly valid. But the reason why we have to mark out our key levels is so that we've got sufficient range to either take profits or allow ourselves to go break even. Because if you're only going to get something like this, for example, okay? So if for whatever reason you take your sells down by here and your stop losses by there, and you've only got 1 to 0.6 R before anything happens, then that's not really, you haven't really got that much room. So it might be best for you to not take that trade. Honestly, one thing I'm going to teach you guys is just to take the best trades possible. So in this situation, you could just leave it, okay? However, if your trade was taken up by here, and then look at all the room you've got now. Do you see what I'm saying? So this is looking, very tasty. You could secure very easy 1 to 2 in this area, okay? So you've marked out your key level. Sorry, you've marked out your exit target. Well, maybe we should just call this the key level. I don't know. because key levels can be multiple things. Let's call it your exit key level. Okay, there we go. Not exit target, just your exit key level. And your exit key level equals the key level that will give your trade problems. So see if you can get profits or break even beforehand, before it reaches. Okay. All right then. So I'm going to carry on our little steps down by here. Okay, so now we're going to scale to the 5 minute. Okay, we've got everything in order. We've identified our key level. We go from the wicks to the bodies. Okay, should put by here. Wicks to bodies. Okay, we've waited for a sufficient rejection. Okay, we've been patient and we've seen that price is rejected by here. Okay, so we've got the rejection, but this could have also have been a rejection, sorry, a candle close in our direction. What we're looking out for, okay, don't plan trades if strong close into level. Okay, just want to make that clear, right? So we've got that. We've marked our exit key level. We've gone from the wicks to the bodies using the brick wall theory. Okay, and if you guys want some more help on the brick wall theory, you just need to send me a DM or inbox, or hell, leave a comment. Very appreciated. I'll make a video on it in due time. But without further ado, let's carry on. Scale to the 5 minute. Okay, now we're on the 5 minute. Okay, what are we looking for? Well, the first thing we need to do is ascertain the trend. Okay, so I can see by here price is trending upwards. Okay, so we can see we've got this motion. Okay, now this is the very tricky thing. Okay, because I tell you guys, and I've told you guys in previous videos, that when we have an uptrend like this, when we have a higher low by here, and then price breaks this current higher high to form a new higher high, this higher low becomes validated as a level in which we need to wait for price to break below, so that we can gather that the trend has shifted. Okay, that's perfectly true. However, when you're on the 5 minute time frame, what you are simply looking for is the change in sentiment. Okay, so step 5 is wait or find the change in 5 minute sentiment to your favor. Now, what do I mean by the 5 minute sentiment? It can be, you can call it 5 minute trend, 5 minute behavior, 5 minute structure, whatever you want to call it. But essentially, it's just getting the 5 minute to act in a way which is coherent with what you want to do. Okay, so if you're looking to take sells, you want to see sell side structure. Okay, you want to see 5 minute sentiment shift. So what do sentiment shifts look like? Okay, it looks like new opposing levels forming, so the characteristics of downtrends forming. Okay, we can see we've got a lower high by here. We can also see we've got a lower low. So when you see something like this, you have to be very careful when you're going by here, because you might be planning and saying, well, this is the level that I got to wait for it to break, which again is true. I wouldn't say this is wrong. Okay, this could also work. However, you also want to take trades at the earliest opportunities, being able to get the best entries, as I'm going to preach to you guys so much. So once you've seen this, I want you to basically ignore all of this and thinking, are we broken above? Okay, price is still moving upwards. No, as soon as you found the sentiment shift, okay, then you're good to go. Okay, now what would happen if price broke above here? Okay, well, this would again be a sentiment shifting against you, because price is breaking above. And when we have sentiment shifts, we identify that by break of levels and trend points forming. And what I mean by trend points, higher highs, higher lows, lower highs, higher lows, you know what I'm talking about, all that stuff. Okay, so sentiment equals the behavior of price, the feel, if you will. Oh, hang on. Okay, how to identify breaks of levels or trend points forming. Trend points equal high highs, high lows, low lows, lower highs, etc. Okay? So that's what you're looking for. We're looking to sell. We obviously want to see lower lows and lower highs. Okay, we can see lower high, lower low. And as soon as you got that sentiment shift, bang. Okay? Things to be aware of. If you are planning a trade and you get the sentiment shift that you want, or you can see that the trend is in your favor, pardon me, if price shows you opposite sentiment to what you want, wait for the shift in your favor again. Okay, does that make sense? So if you're planning a trade, right, in this manner, and you can see the sentiment shift, you're happy, you're good to go, but then price starts to break above levels, then you know that the sentiment is against you. Okay, so now what are we going to basically be doing? Oops, a daisy. Okay, we are going to look for a trade. Okay, how we're going to look for a trade? We're going to look for a double top or a double bottom, or a break and retest on the 5 minute. Okay, so what is a double top or double bottom? For those of you that don't know, okay, the double top pattern is this absolutely gorgeous thing where it does this. Okay, right, that's a double top. A double bottom is this, right? And what is a break and retest? Oops, a daisy. It's when price breaks the level, comes back to retest that level, shoots off. Same is true for a downtrend. Okay, so that's what they look like. Okay, double top, double bottom, break and retest. Okay, so we've got the sentiment shift, and now we can basically see that price has reacted. Okay, so the time is now 6 a.m. This is the time that I would be basically looking to take trades. If you're trading earlier, then you could have seen, well, you wouldn't have because you had to wait for the hourly close. Okay, so forget that. So you saw the hourly close, and now what are you doing? Okay, well, you're basically waiting for one of these setups to develop. So because we've already had a little bit of a push by here, by all means, you could go ahead, stick your stop loss below this level, behind this level, and then ride the wave down, try and go for a 1 to 3. But let's say you wanted to kind of wait for a little bit more confirmation, right? Then what are you going to do? Okay, you are going to wait for something to develop. Okay, so we are simply waiting. Now, we've got a break below this level, but can we take the break and retest? Okay, we can't take it as of yet, okay, because we just need to see a little bit more. Hang on a minute. Bear with me. Bear with me, my friend. Okay, so the reason why, I had to give you some clarification, my bad. So here we go. Let me write some details for it. So double top and double bottom, okay? Once you find the pattern, wait for price to enter. Okay. Here we go. Draw out your zones, okay? So if you're planning a double top or a double bottom, again, you're going to be, if this was the level you're planning, you're going to look for, you're going to do the exact same thing, wicks to the bodies, and that's it. And then you're going to wait for price to enter and reject the zone. Once it has rejected, you will set your stop loss above the level. Okay, below the level. Let's put it behind actually, because that's universal. Okay, so if you had wanted to take your trade by here, okay, hang on a minute. Use a stop order entry. Okay, if you wanted to take your trade by here, where was it, the 6 a.m. close? Hang on a minute. Okay, so if you wanted to take your trade by there, put your stop loss behind the level, okay, let it trigger, by all means, you could have done that. But let's say you wanted to wait for some more confirmation, okay? Then we're basically waiting for one of these patterns to be fulfilled, okay? This has pretty much been invalidated now because this level has formed. So when you have like a new level forming, it pretty much invalidates the previous double top, because what we're basically be doing is going off recent price action. So we're going to look for any kind of price action that is recent, right? We don't want to be going off previous levels, okay, if a new level has formed. So let me quickly write out the criteria for a break and retest, okay? Break and retest, okay? Identify the level to be broken, and as you can see by looking at this, we saw that was here. Wait for a close beyond the level, okay? So past the wicks, okay? Hang on a second. Wait for a close beyond the level. Okay, and this is the really important part, guys, okay? You must wait for what? Hang on. For 2 wick rejections, okay? Because the way you're going to be taking these trades, if for whatever reason, you know, wanted to take this trade, okay, to get the best risk to reward, you're going to be putting your stop loss behind this level by here, okay? If you don't have the 2 wick rejections and you want to take the trade, you have to put it behind the previous, you have to basically put it behind the previous level, okay? So if we've got something like this, where we can see price is broken, you know, this high by here, we have to put our stop loss behind there. If you wanted to take the trade by here and you didn't have the 2 wick rejections, you would have had to do something like this, okay? Does that make sense? You put it behind this higher low. But because you had 2 wick rejections by there, obviously you wouldn't have got an entry, but let's say you did, you could have put your stop loss by there, because these 2 wick rejections indicate that this level is being respected and this is a safe place to put your stop loss. I would always ideally wait for this, okay? So if you wanted to do something like this, you know, it's perfectly valid. You wanted to see if you can get a nice 1-to-1 at the key level, by all means, go ahead and do it. Okay, but the reason why we wouldn't have taken this trade, I personally wouldn't have taken the trade like that, is because I want to try and get a little bit more than 1-to-1. Okay, I always go for 1-to-2s or 1-to-3s. So this isn't going to fit my criteria. So what I need to wait to be able to get a trade with really good risk to reward, I'm going to have to put my stop loss below here. But because I didn't get the 2 wick rejections, now you might say, well, is this a wick rejection? No. Okay, this red candle by there is not a wick rejection. The candle to the left of it does have a wick rejection. You can pretty much see it very clearly when price, you know, when a wick rejection has occurred, because it's just plain as day. And you can very easily see, such as these two, when price hasn't given you a wick rejection. Okay, so we're just planning, we're just waiting. Okay, we can see that this is looking like a double top situation. Okay, we've got the rise, right? We've got a little bit of a pullback. Okay, and now we're looking for price to retrace back into this zone. Okay, let me be consistent with how I'm drawing them. All right, so what we're doing is waiting for price to reject it. We can see that we've got the wick rejection. Okay, so what are we doing? We're going to be putting our stop order entry by here. We're going to be putting our stop loss a nice distance away, maybe give it nice 4 pips or so. And then we're going to basically be looking to take this for a nice, let's go for 1-to-3. Let's not be greedy. Okay, so we're going to wait to see if price wants to trigger it. Okay, so it triggers it by there. And let's keep on going and see what happens. Lovely jubbly. Absolutely fantastic. Okay, so you have to be always on the ball with it. Okay, so when you're trading, you just have to find the earliest opportunity of a trade. Okay, whatever comes first, that's pretty much what you're going to be taking it. So let me finish off these notes so you guys can get a screenshot. To be able to set your stop loss behind the retest level. Otherwise, your stop loss will need to be behind the previous higher low, lower high. Okay, so I know this wasn't a higher low, lower high, but you have to take that into consideration. Okay, so I'm also going to put by here, okay, or TDP, okay, because this would have been our trend defining point. And if you don't know what that is, then go and watch the videos, but I'll explain briefly. It's simply the point in which if price reversed past this level, then the trend has been shifted. Okay, so the reason why, if you don't get the wick rejections, you put your stop loss up by here is because if it takes you out for stop loss, then you just know you were just wrong. Okay, so that's been done. Let's go to another setup using the exact same scenario. Let's find somewhere which was nice and simple. Okie dokie, okie dokie. Okay, let's go by here. Okay, this is a trade that I had taken. Okay, so what do we have here? Right, let's fill out our criteria again. I'm not going to write it all out because you guys have probably got it. Okay, we identified our key level. Okay, we've gone from the wicks to the bodies. Okay, we've waited for a sufficient rejection. We've identified our exit target by using the brick wall theory. We've gone past this brick wall on the right side, found this key level. Okay, we go to the 5-minute time frame. Okay, and what are we looking for? Okay, well, we're looking for a sentiment shift, okay, which is identified by opposing trend formations or a break of a level. Okay, so let's wait and see if price wants to break past this level. Okay, very faintly, but it does break. This is valid. The two patterns that we've got is a break and retest, or we've got a double top pattern. Okay, so when I draw double tops, especially if they're like this, if they have some levels, I just like to extend it down a little bit. Okay, so in this particular example, I'll probably put my double top level back like this. Okay, because we can see that the wicks have been by there. Okay, just be a bit generous. Okay, you guys fiddle around with it, see what works for you. Okay, so what am I waiting for? Well, okay, I'm waiting for the break and retest of this level. Let me see if I've got enough room to be able to go up by here. Okay, no. So for me, this stop loss, for me personally, is a bit too big. So I'm going to, the only two options that I've got is the double top of this area, or I have to see 2 wick rejections by here. Okay, so 1 wick rejection, 2 wick rejections. Okay, so this level gets boxed up. Let me take that away. Right, I'm going to put my stop order by here. Where is it? There we go. Okay, like so. Make sure I'm putting it above the wick. I'm going to try and go for, let's go for a nice 1 to 3. Okay, I know it's inside the level, but I'm happy to take this. Well, I mean, I was happy to take it because I had taken the bloody trade. Okay, and there we go. Fantastic. Okay, so it's very, very, very simple stuff. Okay, let's go to another example, and I'm trying my best not to be biased. I don't want to just show you guys ones that win all the time. Okay, but I want to just go to a place where I would have realistically taken the trade. Or tell you what, I have to also be cautious because I can't go too far back because I am because the 5-minute basically won't give it. Okay, so let's just go, let's do one more. Okay, and let's go by here and let's just work with it together. Okay, so we're waiting for price to react to this key level. Okay, we got the sufficient rejection. Using our brick wall theory, we're going back to find the earliest opportunity where price could give us problems, which is this level by here. I go to the bodies of the candle. Okay, and that's the first instance. Okay, now I'm going to go to the 5-minute and I'm going to basically wait for some kind of a sentiment shift. Okay, this is looking really weird. Okay, I don't really know what to do here, so I'm going to just wait for clearer direction. Okay, I can see now that we do have this sentiment shift. I do have a higher lower high. Okay, so I'm going to basically now see if I can take this trade right by here. Okay, see if price wants to come in. Lovely, it rejected, so put my stop order by there, give myself a nice chilling little stop loss. Can I get a 1 to 2 by the key level? Absolutely. Let's see how this trade plays out. Triggered probably. Boom, stop loss. Okay, that's no problem. Let's go and see if we could potentially take advantage of what price is currently doing. Okay, so in a situation like this, if price has you taken a loss, no biggie. Okay, Are we able to potentially get another trade? Well, let's just rerun the process again. Okay, let's wait for another rejection. There we go. It's very simple stuff. And let's follow the exact same process. Okay, we can see here, right, that price is giving us signs of bullish sentiment. So let's wait for some kind of levels to be broken. I don't have any opposing trend points, or trend points that I want to see. So I just need to wait for something. Okay, price is pushing, price is pushing, price is still pushing. Okie dokie. Let's keep on going now. Have we got a new candle that's formed? Okie dokie. A little bit of a rejection, not too much, but I just got the feeling that I probably just, oh, hang on a minute. Yeah, I've just got the feeling that I probably wouldn't have entered by here. Yep, there was news. So there you have it. Okay, so, oh, hang on a minute. Is this an opportunity? Oh, hang on a minute. We've taken some trades at resistance. Let's take some trades at support. Why don't we? Okay. So let's see if this would be something juicy. Okay. So we got a nice rejection. Using the brick wall theory, we're going back to find the first level that would give us problems. Go to the 5-minute. Okay, now we're looking for some kind of bullish sentiment. Yeah. Yeah, do you know what, guys? That would have probably been it, okay? Because in this situation, price is too bearish. That would have been, in my opinion, bit of an aggressive entry, but hey, it could have worked. It could have worked. So that's it, guys. I hope that was really informative. I really wanted to be as unbiased as possible, and I'm perfectly happy to show you that trades do lose sometimes. And if I really wanted to, I can show you hundreds of trades that I've taken in that exact same way, which have won more often than not. But I just want to give you guys the clearest picture possible and know that it's still a very, very powerful setup, guys. Honestly, if you don't believe me, go and back test what I've just told you and tell me for yourself what you saw the results to be. But that is me going to log off, guys. I hope that was a really good video for you all. Please like, comment, and subscribe, and I'll see you in the next one. Oh, also, please let me know what videos you want to see. And also let me know if my explanations have been good as well. So yeah, I hope it's been good for you guys, and I'll see you soon. Bye bye.